All right, Quanties, welcome back to the channel. It's your host, Quantify, and we've got a very interesting day in the markets to break down. Today is May 27th, 2025, and SPY, the S&P 500 ETF, has put in a strong performance, closing up plus 2.08% at 591.15. Let's dive into the chart and see what key levels we need to be watching. Looking at the daily chart for SPY, we're clearly in a strong uptrend, particularly since mid-April, as highlighted by this ascending blue channel. The price is currently pushing right up against a key resistance level at 591.15, which it briefly touched today. If we can get a sustained break above this, the next significant resistance I'm watching is up at 596.60. Beyond that, we'd be looking at new all-time highs and potential psychological levels like 600. Now for support. The first immediate level to watch on any pullback would be 585.81, which was a previous point of interest. Below that, the lower boundary of our ascending channel becomes crucial. This currently lines up pretty closely with the 50-day moving average, which is the purple line, sitting around 576.12. There's also a noticeable gap on the chart between roughly 576.12 and 580.81. Gaps often get filled, so this area could act as strong support if we retrace. If that area fails to hold, the next major support is the 200-day moving average, the green line, which is down at 557.34. And further below that, there's another gap from an earlier period, roughly between 527.39 and 532.39, which could serve as a more significant downside target if we see a larger correction. The RSI is currently at 62.77, which indicates healthy buying momentum, but isn't in overbought territory yet, suggesting there could be more room for this rally.
So what are the trade ideas? For a long position, a confirmed breakout and hold above 591.15 and ideally above 596.60 could signal further upside. Targets could be the psychological 600 level or an extension based on the channel's height. Alternatively, patient bulls might look for an entry on a pullback to the lower trend line of the channel or that gap fill area around 576-580, provided it shows signs of holding. Always use a stop loss, perhaps below the entry support or the channel. For a short trade, you'd want to see a clear rejection from these upper resistance levels, or more convincingly, a breakdown below the ascending channel and the 50-day moving average around 576. If that happens, targets could include the 200-day moving average around 557. Now, let's touch on some headlines that might have contributed to today's bullish price action. First, the U.S. May Consumer Confidence Index came in at 98.0, which absolutely smashed the consensus estimate of 87.0. This is a really strong beat and indicates that consumers are feeling significantly more optimistic about the economy than analysts predicted. Higher consumer confidence often leads to increased consumer spending, which is a major driver of economic growth and thus very positive for the stock market. Second, we got news via U.S. Senator Dave McCormick that Nippon Steel has agreed to invest a substantial $14 billion into U.S. steel. This is a significant foreign direct investment. It signals confidence in the U.S. industrial sector, likely means job creation and modernization, and generally provides a positive sentiment boost for the broader market, suggesting underlying strength in the economy. And third, comments from Hassett regarding tariffs could also be playing a role. He suggested that lower tariffs, potentially 10% or less, might be considered for countries that come with good offers. Any movement towards lower tariffs is generally seen as economically positive. It can reduce costs for businesses and consumers, ease inflationary pressures, and improve international trade relations, all of which are typically well received by the market. So a combination of surprisingly strong consumer sentiment, significant corporate investment news, and positive overtures on trade policy seems to have fueled today's rally. As always, Quanties, trade smart, manage your risk, and keep these levels in mind. Don't forget to like and subscribe, and I'll catch you in the next one.